Welcome, ladies and gentlemen, to Precious Metal Summit here in Zurich. And now we want to talk to Keith Boyle, who's the CEO of Newfoundland Gold Corp for the first time on Commodity TV. Welcome.
Welcome. Thank you, Jörg.
Great to see you again. We have spoken, I think, 3-4 years ago.
Some time ago, yeah.
Yeah, really some time ago. But now, Newfound Gold.
Newfound gold for a new story.
Yeah, exactly. And it's not only that you find new gold, but you have found already some stuff, of course.
Yes.
So maybe you give us a short overview on the company, and
Sure.
then we go a little bit more into it.
Well, Newfound Gold was founded back in 2016. It found a fantastic deposit in Newfoundland.
Mm-hmm.
And since that time, they've drilled it off. And what we've done is at the start of this year, I started with the objective of getting into production. Mm-hmm. And so taking a company from exploration to production. I'm happy to say that we recently closed on a transaction
Mm-hmm.
purchasing Maritime Resources. And so they have a mine that started or is starting to produce gold. Mm-hmm. So we will have achieved our objective within a year, getting to production.
Okay, wow, fantastic. That's hyper fast, I would say. Fantastic. So maybe let's start with the exploration part of it. What is already found? What do you have?
Okay, so at Queensway, which is the Newfound Gold property. So at Queensway, we have a total of 1.4 million ounces of indicated and another 600,000 ounces of inferred. Mm-hmm. We released a preliminary economic assessment last July, mm-hmm. This past July, and showed a mine plan that produced 1.5 million ounces over a 15-year mine life. Mm-hmm. What we did there, though, we phased the build so that we would start small. We have a high-grade core mm-hmm. of that deposit, and so by starting small, we're able to minimize the CapEx, minimize dilution to shareholders mm-hmm. in the funding of that CapEx, mm-hmm. and really increasing the return to shareholders. Mm-hmm. So we're building a mine that's going to produce over 69,000 ounces. When we add that to what Maritime's going to produce, we're targeting over 100,000 ounces of production by the end of 27.
Wow.
For $155 million. Mm-hmm. And with that cash flow, we're then able to expand to a 7,000 ton a day plant, mm-hmm. producing over 172,000 ounces a year. Mm-hmm. And then when we add what's coming from Maritime now, mm-hmm. we'll target over 200,000 ounces. So by 2031, we're looking at being over 200,000 ounce producer.
Mm-hmm. Wow. And it's in the heart of Canada, I would say, in that sense. So safe jurisdiction, everything is fine.
Fantastic jurisdiction.
Yeah.
Newfoundland's a great jurisdiction. Yeah. I mean, I've worked in many jurisdictions, mm-hmm. and we can clearly see how the government want to build mines. They've said we want 5 mines by 2030. Mm-hmm. On top of that, our property package at Queensway is 110 kilometers long. That's mm-hmm. a huge property.
I would say there's some upside.
There's some upside there. We've got some fantastic targets. We've recently released exploration results from an area called Dropkick, mm-hmm. Which is 11 kilometers to the north of our resource area, our mine plan area, and those results are fantastic. We're so excited by that discovery that we're following it up. We've been drilling there since June, yeah. And the first set of results really do show that, hey, we think we're onto something here.
Absolutely. So how have you had the chance to acquire Maritime? Because it looks to me like at those gold prices, when you can acquire a producing mine, that's like a jackpot.
Well, we started this conversation really back in March at the PDAC, just mm-hmm. not long after I started. Mm-hmm. And we saw the potential of combining the two companies mm-hmm. to show that, look, there's scale to it. Because mm-hmm. at the end of the day, a small mine plus, another small mm-hmm. to medium mine, it's not as exciting. But you put them together, mm-hmm. and we also de-risked the construction of our Queensway mm-hmm. deposit, because now we have a producing mill. Mm-hmm. So that first phase, that small 700 ton a day phase, we said we were going to ship to a mill off-site. We have one now. Mm-hmm. So now we have the destiny in our control.
Yeah, I mean, that's really fantastic. So the question to me is then, let's assume production goes well in the start here. How much do you think you can finance out of cash flow for the future development? Or do you have to go on a larger item back to the capital markets than to put those stages into production?
Well, we've recently hired a financial advisor who's an expert in more the debt side of the financing package. And so we believe that with the cash flow, it's like the equity portion of our financing. And so we're looking to put in a debt facility or a non-dilutive facility. That's really our first choice. We'll see what comes out of it. But with cash flow, you're right. That's a way of supporting something else rather than go back to the capital markets and try and do it on equity.
That means especially with those gold prices. So that brings me to the question, where do you see your combined AISC, just roughly?
Well, our PEA, I can comment on the PEA. The PEA, it had basically just under $1,300 all-in sustaining.
That's fantastic.
So that's that's very good on average for the life of mine. In the earlier years, a little bit higher, so closer to 1,300. And then when we're producing that 172,000 ounces. In the middle part, we're down to less than $1,100 all in sustaining. So a very good cost profile, good margin. Why? Because it's good grade.
Yeah, super. Now, I mean, for today's price, it would be a $3,000 margin. I think that's quite healthy.
That's not bad.
Super. Who are your major shareholders? What is management share?
So we have Eric Sprott is the big supporter. He's got 18% of the company. We've got Dundee Corporation, and they have 11%. And then we have quite a range of institutions. We really got good, I'll say, interest in the story when we reset with the initial mineral resource that came out back in March. We went out and we marketed to institutions, and they really liked what they saw and heard. And so when we did a bought deal financing back in June, we were 3 times oversubscribed and all institutional. So it was fantastic. So we don't know the exact percentage, but it's well into the teens, if not the 20% of that. And as far as management, well, it's all new management. So back in December, changed out the board, and they today it's 100% new board members. They've been accumulating. So we have blackout periods, of course, and so during those blackout periods couldn't accumulate. But as soon as we get out, we're all in the market accumulating.
Okay, super.
And participated during the financing too.
Yeah, fantastic. Great. Hey, thank you very much for the insight. I say keep it going, because with those combined mines and then stage it further, that's a great game plan.
Yeah, well, we think so.
Super. Thank you
Thanks
very much. Good
John.
luck. All the best. Yeah, that was Keith Boyle, the CEO of Newfoundland Gold Corp. And you heard it. Things are really going smooth. Not only that they found, not newly, but they found a lot of gold. But they will combine now really 2 production facilities, which is fantastic. I think that's a super first run. And then stage the rest also with the, let's call it the additional production. And this is fantastic, first of all, from the financing side, but secondly, to use the cash flow at those high gold prices to really develop further the company. So I would suggest you really check out this company. Thanks for watching us. Bye-bye from Zurich, from Precious Metal Summit.